What's up, everybody? It's Will back again with another video. It's the blacksmith back in the house, back in the forge, as you can see. Welcome to the Blacksmith Podcast. If this is your first time, welcome. Over here, we forge guys into men, okay? And what you see on the screen is a bit of a treat. I do this every Saturday. I do a 1 hour live Discord at 10 a.m. PST, Pacific Standard Time, because I'm in California love. All right, I'm not a vocalist, but listen. So we're going to jump right into this. But if you don't know what you're looking at, this is Robinhood's first quarter 2025 earnings call, right? So this is where they talk about, the trajectory of the company, how they've done over the last quarter, what their numbers look like, and what they're going to do. All right. So right here, they were taking the top three questions that were asked. I'm going to deal with the top one that I like, and I'm telling you, you should be over the moon about this one. All right. Now, I did a 1 hour live on this, so if you go to my page, my channel, it's actually on there the whole 1 hour, and I only did like 33 minutes into the video. But this is one that I wanted to make a video about specifically and talk about. All right. So let's get into it. Now, this guy you see on the screen here, his name is Vladimir Tenev. Vlad Tenev is a co-founder and CEO of Robinhood. And then the guy sitting next to him, his name is Jason. I can't remember his last name, but he is the CFO, the Chief Financial Officer. So here we go.
Awesome. All right. Thanks, Vlad. The next question is from Nico, who asks, when will users be able to invest in private companies such as SpaceX?
All right. First of all, if you trade on Robinhood, TD Ameritrade, Webull, it doesn't matter. You're investing in public companies, publicly traded companies, companies that have gone public. And private company investing is not something that's well known to the average Joe. Let's hear what they have to say to the question. I believe Vlad's going to speak on it first, but I'm going to stop it periodically.
Yeah. So this is actually one of our top policy priorities. We believe that it's actually quite crazy that, customers can't invest in private companies, given that private companies are staying private longer. The days of, Microsoft going public at a multi-hundred million market cap, or Apple at relatively low market caps, and you being able to take advantage of a lot of the appreciation in public markets, they're fewer and far between. Now you have companies like OpenAI and SpaceX still private and in valuations of hundreds of billions. So those gains are accruing to a smaller and smaller group of insiders. We have the technology to.
All right, let's deal with what he said right there. Right. You can see my screen right here. Let's see. Watch this. This is why this is so important. I should have had this up already, but don't even worry about it. I will fail you not. Listen, in order to invest in the private companies before, you had to meet a certain criteria. And most people do not know this, right? I've known this for years, but guess what? I wasn't an investor prior to 5 years ago. I just hit my 5 year mark at the end of last month in April, right? I've been investing for 5 years, and the amount of knowledge I've learned now, it makes you want to cry when you think about how you spent from 18 until 34 when I started investing, right? It is a crying shame. I should have been in the stock market a long time ago. But it's platforms like Robinhood that came along and allowed the average common man to start investing in the stock market with zero money, and they give you a free stock, right? But let me tell you about why this is so importante, right? So if you look on the screen right here, you will see you had to meet a certain financial threshold. First and foremost, let's talk about what your net worth needed to be. You see this? You need to have a net worth exceeding $1 million, excluding your primary residence. So you could live in $1 million house, but that doesn't mean you have money, right? Let's say you bought that home when it was 200,000 in SoCal here in San Diego, and it appreciated to $1 million 10 years later. That doesn't make you necessarily wealthy, right? So they want to exclude that. But then look, you have to have an annual income of $200,000 a year or $300,000 joint with a spouse for at least 2 years, right? So, first of all, you just shut out 80-90% of all people alive, right? All people alive for all time, right? And I'm being generous with the 80%, right? People aren't making that kind of money. You would shut out earls and dukes in England who were rich back then, right? Of course, these are American standards. These are, right now standards. However, 80-90% of people are not meeting this threshold. 200,000 a year is life-changing money. Life-changing money. The average man probably makes $40,000-$50,000. So you're talking 5-6 times that much, 4 or 5 times that much. I'm sorry, I'm good with math. So anyway, that's why it's huge, because you were shut out of investing in companies that were private. That's why people say the rich get richer. They do, because they're allowed to get richer. And why is this such a big deal? Because when a company first comes out and it's a private company and they want to be a startup company, right? Let's say they need $10 million in order to get started. They need a building, they need 5 trucks, they need 28 employees, they're going to need 30 computers, automation, all kinds of stuff, right, to get started. And what they do is, how do they raise that money? Well, they have to do seed rounds, seed, like planting a seed. And they go to what's called venture capitalists, right? Or VCs. If you ever heard VCs before and you're talking about money and investing, they're talking about venture capitalists. So let's look at the definition. Look right here: an individual or organization that provides funding and expertise to startups and other companies with potential for rapid growth. So basically, people and businesses that have cash money. So look, so what's going to happen now is they go to a venture capitalist and they do seed rounds. In the first round, they may need to raise like $2 million, right? And then they close out the first round and then they start building. And then they come back in the second round and they say, okay, now we need to raise 5 million. And then they close out and they start building. And then the third round, now they just need $2 more million, right? And so these people who are agreeing to invest in their company, what they'll do is they'll say, okay, I'll give you $500,000, but I need you to return me 50% profit. What does that mean? I need my 500,000. Did I say million? $500,000. I need my 500,000 back plus 250,000 on top of that. That's all I require. Just give me a 50% return on investment. And if my return on investment is returned in 3 years, I'm good, right? Okay. But then there's other people that say, I'll give you 2 million. But you know what I want? I'll close out your whole first round. I'll give you 2 million to close your first round and let you start breaking ground. But I want a 10% stake in your company, which means of all the shares you're going to divvy out, let's say you divvy out 1 million shares of your company, they want 10% of them. So they want 100,000. So now they own 10% stake in your company, right? That's how that works, right? But guess what? Here's the thing. When it's a private company, those shares may start out extremely cheap, 40 cents per share. Now, that person just bought 40 cents per share. Can y'all see this? Yeah, you can see this. All right. So that person gave you $2 million and they got shares at 40 cents per. Guess what? That's 800,000 shares. Now, watch this, folks. If you are not excited about being able to invest as a common man into private companies, I am going to make your day. I'm going to make your week. I'm going to make your whole year. You better start investing with Robinhood right now. Watch this. And no, I'm not paid. I don't have an affiliate link. They said no, but I'm going to change their mind. Watch what I'm going to show you right now, right? So now 800,000 shares. Now watch what happens. Those shares now will appreciate to when the company goes public, once they get their $10 million and they start building and they start working, when they plan to go public after a year or two, because they usually don't stay private like longer than 5 years, right? And that's what Vlad was just talking about. Companies are staying private longer and longer and longer. What happens is that company will get another evaluation, and now 2 years later, they're a $50 million company, right? So they raised $10 million. Now they're $50 million companies. That's their evaluation. And now when they IPO, those shares might be worth $40 per share. What does that do to these guys right here? These guys just earned I said $40. So 39.6 on every single share. Look at how much money these guys just earned. See that? The rich do get richer. They do. And this is why. Because they can afford to buy $800,000 shares at 40 cents per. See that? But when they sell it, when it IPOs, and they won't sell it right away, when it IPOs at $40, they'll wait until it goes up. Everybody like us will be like, oh my God, it's Starlink. It's starting to, it IPO'd at $40. Get in now. So we'll get in now. We'll drive the price up to $50. Bam. They sell, they take profit, right? So that would be 49.6, right? So we can do that math. We got 800,000 times $49.60. Look at that, 39 million. So they will go ahead and sell all the people who seeded in this venture capitalist thing, right? And early investors, they will go ahead and sell out. And because they sell out and pull that amount of money out of the business, what does that do to the evaluation of the stock? It tanks the stock down big time. Now, I'm using huge numbers so you understand what I'm talking about, right? Because this is exactly what it's like. And then it tanks the stock. In fact, if you were to watch Robinhood, right? Watch Robinhood. Robinhood IPO'd in 2021. See right here? 2021, July 29th, 2021. I know what I'm talking about. So watch this. It went up to $55. And look, this is August 6th. So a week after being out. And watch what happens. There's a precipitous drop, $42. It spiked again, back down, $41. It spiked again, back down. What are we at? $34. It spiked a little bit and back down. And I saw the value in this company and I was buying it right here in this trough. $7, $8, $9. I was getting them. You better believe it, because I saw this coming. If you watch earnings calls, that's why it's so important to know what the heck is going on with the company that you say that you believe in. You got to pay attention to news. All right, let's get on with it.
Do this. And in fact, I wrote in an op-ed for the Washington Post that tokenizing private equities is a huge unlock, both for individuals, but also for these companies and for crypto technology, which can actually solve a lot of the problems in secondary market transactions that have been tried thus far. What's needed is comprehensive security legislation in the U.S. and also for us to rethink the accredited investor rules.
You heard that? He said legislation. He said the SEC. So let's go look at who them people is. Now I know that was extremely grammatically incorrect, but I think it's kind of funny. All right, the SEC. The SEC. All right, Securities and Exchange Commission, right? You've seen it with your own eyes. Look at it with your face, right? He's talking about having to go to Congress and go through the SEC in order to allow the common man to invest in private businesses. That's how big this is. The blacksmith is forging today because that's how big it is. The rich have shut out the common man, and they've done this since the beginning of the stock market. We just didn't know, right? But this guy, Vlad Tenev, he came on Earn Your Leisure twice now, right? EYL, if you didn't know, shout out to EYL, Earn Your Leisure. He came on to their show twice. And I think the last time was 2 or 3 years ago. I think his net worth was valued at $2 billion, right? He's co-founder and CEO of this company, and he's a first generation American, right? And he talks about a story. He's got an engineering background, yada, yada, yada. But what I'm getting at is this is the kind of guy who probably sat back and was a dreamer and said, man, I see something that's not right in the world, right? I see something in my society that I don't like. So what I'm going to do is I got this vision. I can't change the world all at once, but what I'm going to do is I'm going to go be an engineer and I'm going to start up this stock exchange and I'm going to let the common man open stock exchange, because what you might not know is in the early 2000s, 80s, 90s, you needed 20,000 cash money, 50,000 cash money, 100,000 cash money in order to open a stock portfolio, an investment portfolio, period. Or for some exchanges, you weren't worth their time. You weren't worth the time of Charles Schwab or TD Ameritrade. You weren't worth their time. You didn't have enough money to make them interested. This is why the common man has been shut out, right? And he's trying to open it up. So he might have been a young man that had a dream of changing the world, and this is how he's doing it. And I tell you what, I believe in your dream. Let me show you. 400 times at least, I believe in your dream, sir. Keep talking. Let's get it.
Which shut out north of 80% of the public currently. So both of those we're making progress on. We're in active discussions. There's definitely a willingness from the administration and lawmakers to engage in these issues. So stay tuned, but we believe we're going to make progress here.
Great. Thank you.
All right. So that's the end of what he was going to say. Listen, folks, I don't want to make this too long. Throw it in the comments. Did you know this stuff? Did you not know this stuff? What do you think about this stuff? What questions do you have for me? What questions do you have for me that I can answer for you? Let's engage. Let's parlay. As always, hit that like button for the algorithm and please subscribe. The views do not match the subscriptions sometimes on these videos. And I'm giving out this info for free. So please show your appreciation. Just hit that subscribe button. I'm going to keep bringing you content like this because I also have a dream that people should be financially literate. And this is how we do it. All right. The blacksmith, the forge is going hot. Cold. I said what I said.